Hello, everyone. Welcome, welcome. Our guests are coming in through the waiting room. Welcome to this month's NJBIA Business Growth Roundtable. And let me just share my screen and hmm. Oh, here we go. Let me share my sound. And welcome to this month's New Jersey Business and Industry Association's Business Growth Roundtable. We created this show because we really want to equip you with what you need to succeed.
This event is ideal for business leaders who need to stay up to date on strategy, technology, and trends to grow their business.
So let's get started. Hello, everyone. I am Donna Miller, Chief Visionary Officer and founder at C3 Works, where for the last 30 years, we've been helping companies to accelerate their growth by providing advisory and support services around biz dev, operations, and finance. What we do is we allow growing teams and companies to focus on that which truly drives their business forward. Our clients know that by bringing us in, we are going to build efficient, connected, and executable systems, whether they execute or we do, helping them to lay the foundation to build a company that will run and grow without them involved in every little detail. Want to talk about scaling? I'm happy to set up a call. And now let me throw it over to my fabulous co-host, Rachel Durkin.
Hello. Thank you, Donna. And my name is Rachel Durkin. I'm with Paradigm Marketing and Design. We are a web branding, marketing, and sales enablement agency that specializes in working with clients with a complex sale. So if you have a sales team and you want to increase the number of leads that they are getting and improve their closing rate and cycle, we can help build a marketing to sales infrastructure that will make that happen. And this event would not be what it is without our very amazing sponsor.
We are thrilled to have the team at Summit Place Financial Advisors join us as a sponsor. Summit Place Financial Advisors provides personalized financial guidance for successful individuals facing complex investment, tax, and estate planning needs. As an SEC registered firm, they work solely in the client's best interest, offering holistic advice without selling products or earning commissions. So we thank our sponsors. Okay, thank you. So Anthony Arena, tell us what's going on at NJBIA.
Hey Donna, how are you? That video was fantastic.
We're
Really
trying
looking
to zhuzh
forward.
it up a bit. I hope you.
Yeah, it looks
Very
great.
hard to look at myself, I have to say.
Yeah, you look great. Anyway, thank you all for joining us today for the New Jersey Business and Industry Association's Business Growth Roundtable, our last one here in 2025. And please look forward to coming back in 2026. We at NJBIA are thrilled to have helped create this initiative led by such a talented group of women. And for those of you who are new to NJBIA, we are the nation's largest statewide business association, representing over 1/4 of all employees in New Jersey. NJBIA is continued and dedicated to supporting companies across the state, always guided by our core principle, business at the center. We also have other opportunities that are available throughout signature events, both virtually and in person throughout the year, our magazine and digital opportunities, and our podcast and television show. And we also have money saving programs for our members that include payroll opportunities, 401k solutions, healthcare, and HR support. So I'm Anthony Arena. I'm one of the sponsorship sales executives here at NJBIA. I'll put my information in the chat. But one more thing before I turn it over to the talented and my esteemed colleague Donna Miller. Keep in mind that we have our leadership series coming up on December 16th. It's virtual, work-life integration and well-being, and our public policy forum taking place on January 30th, 2026. You will not want to miss this event. It's at the Marriott in Forrestal, and Governor Mikey Show will be present to address our business community. So I'll drop my information in the chat. Donna Miller, back to you.
All right, thank you, Anthony. So a little bit of housekeeping before we get into our program. We are recording this. You will get a link to the recording, having registered for the event. We will probably, I can't promise, this is a hot topic. We're going to try to leave time for Q&A. That said, please feel free to drop your questions in the Q&A as you think of them, because I'm sure I can volunteer your panelists and say that if we don't get to them during this webinar, I will get you answers afterwards. So, but use the Q&A segment for that. And also, two other things. You're here in a room with a whole bunch of people who are interested in what you're interested in. That makes for good virtual networking. So I want to encourage you to drop your information in the chat and engage with the people in the chat as you can. And next month, we will be talking about the hot topic AI, and I will drop the link to that in the chat when I'm finished with my little introductions. But also, I want to point out to all of you, I want to encourage you to visit the NJBIA website because they have recently, and I don't know how recent, Michelle can help with this, they have recently published the 67th annual Business Outlook Survey. And we're here talking about our playbook for next year. And this is some really valuable information that we will certainly touch on today, but there's a lot more information there. So visit the website, take a look at the Business Outlook Survey. It's quite the undertaking, and there's a lot of really good data in that report. So with that, let me bring our MC, our facilitator, and our sponsor, Susie from Summit. So Susie, I'm going to hand it over to you.
Thank you, Donna. And to echo Anthony, I love the video. Awesome. So let's get started. We have a lot to cover. I want to be mindful of everyone's time. First, I just want to say thank you to Donna Miller and Paradigm and NJBIA for organizing another great event. I'm really looking forward to the conversation, and a big shout out to our speakers for taking the time to be here with us today. So to kick us off, I want to ask the speakers, and I'm going to bring on Michelle and Chris and Jason, if you could all join me. I'm going to have each of them just quickly introduce themselves, and then we'll dive right in. Michelle, would you mind kicking us off, and then we'll go to Jason and then Chris?
Sure, be my pleasure. Good afternoon, everyone. Michelle Sakurka. I proudly serve as the president and CEO of the New Jersey Business and Industry Association, where each and every day when we put our boots on the ground, we advocate tirelessly on behalf of our job creators for an affordable and regionally competitive business climate. And because New Jersey is so expensive, we provide great products and services in order to keep your cost of business down.
Thanks, Michelle.
Good afternoon, everyone. Jason Garatas with Website Closers, along with our sister companies, Valley Big, Sellerforce, DealPipe, and our lending brokerage, Yaw Capital. We're an M&A firm. We represent sellers of businesses, primarily in the tech space, but also in more traditional business services spaces as well. We usually have about 250 to 300 closings annually, and we have about 1.4 million buyers following us globally.
Chris Gula, I'm the Senior Investment Strategist at Summit Place Financial Advisors. Thank you again for that wonderful intro. So we customize our clients' portfolios, and we take a top-down approach to doing that in accordance with our clients' goals and objectives. And so we, in that top-down approach, I mean, there's a lot going on in this macro environment, and excited to kind of touch on everything.
Thanks, Chris. So great. Well, let's jump in. Thank you all so much. It's been an interesting year. A lot of shifts going around us. Markets are up roughly 16%. Chris can correct me on that. This year, we've seen interest rate cuts. We talk about technology and AI continue to transform how we work, and New Jersey's preparing for a new administration. So naturally, this has us all asking, what does this all mean for my business and my industry? How will future rate cuts and tariffs shape the outlook? And then what should I be doing now to prepare for 2026? So our wonderful panel will help us unpack this and much more. Michelle, I'd love to start with you and then we'll follow with Chris and with Jason and then Chris. Can you share some of the trends or shifts you're seeing as we prepare for 2026? And what are some of the challenges you're hearing from clients? I would love to hear your perspective on that.
Sure, absolutely. So let me start. You heard that we just conducted our 67th annual Business Outlook Survey. I dropped our website in the chat. So if you go to the website, you can find the results of the survey. But there was one message that rang true. And basically, it was a validation of something we say at NJBIA each and every day, that businesses need predictability and certainty in order to make investments and decisions on how they're going to move their company forward. And unfortunately, 2025 lacked a lot of that predictability and certainty. And as a result of that, I think we saw, some stagnation, if you will, in growth. So the two big factors, number one, energy. Businesses were not seeing the big energy hit that was going to come to their bottom line mid-year, July 1, when energy rates accelerated to a point that folks were going, what the heck happened? BIA had been sounding this alarm for quite a while here in the state of New Jersey that no longer were we generating internal energy within the state in order to support our own needs, but we were starting to import our energy, and the cost of import far was exceeding our ability to have been a net exporter of energy just a year ago. So that had been coming. We saw it coming as policy people who keep our eye on policy, but unfortunately, our business people who we speak for each and every day, who have their heads down running their businesses each day, got quite the shock, quite the sticker shock. And 68% of those surveyed said they were surprised to see that increase. Many of them said they have a tough time absorbing that increase. Some had to raise costs as a result of it. And they're not feeling too confident yet going into 2026 as it's going to be addressed. Then the other big issue was tariffs. I know we're going to come back to that later, so I'll just pause there for a minute. But overall, the cost of doing business in New Jersey continues to be the number one challenge on behalf of businesses and job creators here in the state of New Jersey.
Thank you, Michelle. Jason, Chris?
Yeah, just on my side, I look at things more from a global perspective and nationally, since we do handle mostly technology companies. So this isn't just for New Jersey, but, certainly coming out of COVID and going into 2023, we saw a lot of changes in the M&A environment. Now, coming into 2025, we had expected to have a record year, but ended up not having that year because of some things that happened in April with tariffs and so forth. So that did disrupt quite a bit. But that has also started to change significantly here in the last 3 to 4 months, where we're seeing lots of green shoots and lots of interest in going to market on the sell side, which had been pretty suppressed over the last 12 to 18 months, just because of all the changes. I mean, a lot of companies got themselves into trouble during COVID, too much inventory, too many warehouses, too many employees, and too much interest compounded on, investing in all of those things. And now folks are getting their arms wrapped around it, and the Fed funds rate has dropped to a point where, SBA and other capital market lending, senior lending is starting to look pretty interesting. So we're pretty excited for that, and we are seeing a lot more deal volume. One of the things that's helping to remove what was a suppressed valuation process is buyer demand. As I mentioned earlier, we have 1.4 million buyers following us. Some don't always stay all that active. But this year, we're adding about 400 a week of new buyers to our platforms. And that is a record. That's even higher than it was during COVID, when we had record years for tech sales. And so there is a lot of interest out there right now from buyers looking to find ways to build wealth, generational wealth through buying a business. And so that's pretty interesting. And, I don't know if it has anything to do with layoffs, because there have been a lot of layoffs, especially in the tech industries. They tend to want to go and, buy a company, once they get to that point. They don't want to go back to work for someone else. So we are seeing a lot of that. And then also, I think, my other note here is just that seller psychology has changed. There was, again, a suppression in seller psychology to selling. They felt like, because interest rates were so high, they weren't going to get a good valuation because that suppresses multiples. But that has changed. I think interest rates have dropped a little bit. We're probably going to see another 50 basis points over the next 6 to 12 months of drops. So that's making, lending, at least for senior lending, a little bit more attractive, and allowing folks to, get higher valuations for their companies. So overall, I would say, again, these last 3 to 4 months, we've seen a big jump across the board on sell side. And next year, we believe we will have a record year.
Great. Thanks, Jason. Chris?
Yeah, just to kind of continue on kind of that broader economic view that Jason touched on. I mean, we see pretty solid economic fundamentals. Real GDP growth is going to track about 3.5% in Q3, which, sure, that might be a step down from the 4% that we were seeing for the past couple of years. But overall, it's pretty strong. And, a lot of the noise about the economic environment is really when you drill down kind of below that aggregate data, that's where this K shape kind of takes hold, where you have high earners versus low earners, large businesses, small businesses, really seeing kind of diverging opportunities for both of them. But again, when you kind of roll up that aggregate data, which is what the Fed is paying attention to, it's pretty strong. And when we look kind of where the trajectory of the economy might be headed over the next couple of months, I mean, employment is really our focus. And there's a lot of debate on whether that's more demand focused or whether it's supply focused. But we should really see some clarity, especially since we have labor force participation, especially among prime age people, so 25 to 54. That's at 20-year highs and close to the highs that we saw in the late 1990s. We also have a closed border that should really support pretty stable hiring. And as we kind of move into a more clear policy environment, the OBBA is taking effect next year. And then we should also see some clarity around the tariffs, which should support a lot more hiring. And because the consumer is the biggest driver of economic growth, more jobs, higher wages should continue to support spending and support overall economic growth.
Thank you all. That's really a lot of information. Keeping us moving along, Chris, I'm going to come to you again. With recent rate cuts, and I think the Fed is meeting tomorrow to talk about whether there's another rate cut this year or next year, and continued tariff changes, we're seeing impacts across different sectors. Can you share a little bit about what you're seeing and what some of this means?
Yeah, sure. So it's basically all but assured that we're going to see a 25 basis point cut tomorrow. But what I'm paying attention to is what Chair Powell will say in his press conference afterward. We're seeing a lot more Fed board members kind of question if we continue to see rate hikes and whether they're necessary in this environment. And it's not just our Fed. You see central bankers around the world at a lot of these major central banks questioning whether they should be cutting or whether they should actually be hiking. And so, generally, like our Fed is the one leading this environment, but it's kind of flipped, where now other central banks are kind of leading this environment. And if we do see rate hikes from these other central banks, I mean, that should kind of weigh on the dollar and support U.S. domestic growth while also supporting foreign currency denominated assets abroad. So that's kind of what I'm watching for in Chair Powell's conference. Do we get a little bit more of a dovish tilt, or do we start to lean more hawkish along with a lot of the rest of the world? Yeah, so happy to turn that over.
Yeah. Jason, Michelle?
Yeah, just from my perspective, putting things into numbers, over the last 2 years, interest rates on senior debt have been somewhere in the 10 to 11% range, which makes it very difficult to make an acquisition and have a debt service coverage ratio that allows a high multiple on a business, right? So that goes back to what I was saying before with the suppression of valuations that was occurring. Now, because we see hawkishness for the next couple of years, hopefully, and interest rates dropping, we do see banks starting to come down to that 6, 7, 8% range, depending on the quality of the buyer. And by allowing senior debt to come down that low, we then increase valuations because there's allowance for more interest to be pushed into the debt service coverage ratio. So that is allowing, again, a seller appetite here. Now, because of the tariffs, which was another question that you asked, we've seen things on the business side go kind of two different ways. We've had these companies, of course, that are primarily focused in China on the consumer goods place. Well, those companies, if they didn't have any other place to go, they were negatively impacted, and most of them went off market in April and May, which had a big impact. I think we lost 20 deals that were active and about to fund. So that was not fun to go through, but of course, a lot of those companies are now coming back to market because they have corrected themselves. They've found ways around these things. I will tell you that most of the companies that we work with are finding ways around these tariffs. They're not paying them, either negotiating them away, or they're working with different countries, or they're doing other things that are maybe questionable, but they're certainly doing some things to get around them. That's what we're seeing anyway. And then there's the other companies that, they weren't in China. As an example, we have one company who primarily gets their products out of Peru. And I think they had a 10% tariff placed on them. So for them, their perspective, they negotiated away most of that and they weren't impacted. Yet a lot of the other clients that were using similar synthetics in their products were all coming out of China. And so they had a boom. And when we went to sell them, the multiple was much higher. So we have winners and losers as it relates to these tariffs. But I would say overall, there's been a lot more losers just from what we're seeing, because we do sell a lot of companies with consumer goods. And again, I would just say, because we believe rates are lowering and will continue to lower next year, we do believe we'll get back down to that average of about 8% on senior debt. And that's kind of a unicorn place to be. If we can get senior debt around 8% in the M&A world, we're pretty happy. And so are most buyers.
Thanks, Jason. Michelle?
Yeah, I think I'll just piggyback on tariffs for a moment. So yes, winners and losers, definitely, Jason, right? You said on consumer side, and I still think we're yet to see in the holiday season the toy industry. We don't make a lot of toys in America anymore for many reasons, and I think we're going to see afterward the impact of tariffs had on the holiday season and purchasing and cost, et cetera. But for the manufacturing sector, so NJBIA, our history, we run deep in our DNA in manufacturing. We were established as the New Jersey Manufacturing Association 115 years ago. Today, we speak for all industry across all verticals on a horizontal of every issue that impacts you as a job creator. But we vertically continue to monitor and lobby on behalf of manufacturing. And I sit on the board of the National Association of Manufacturers. And the big challenges there are where we do not have the particular items, minerals, things like that here to source in America that we need to get from afar. Still trying to figure that out, looking for some tariff-free opportunities. If we have manufacturers who are looking to make reinvestment here in America, which was the goal of this whole policy, we need to ensure that they have the bandwidth as well as the runway to get those manufacturing facilities up quickly. Here in New Jersey, that's an incredible challenge because of our density, as well as our permitting rules and time to market, et cetera. But across our nation, there's a lot of states that are going to be benefiting from seeing reshoring and manufacturing pick up. One big, beautiful bill. While many will criticize many parts of it, if you stay focused on manufacturing, it kind of was like rocket fuel for manufacturing. The tax incentives and credits in there are really meant to, address these disparities in tariffs. So, to overemphasize winners and losers, that really is where we are, depending upon where you sit, what you need. But I think this is all going to shake out. And I think to Jason's point also, maybe Chris said this, it's people are just creating their new business models now. And they're normalizing. And I think we're going to continue to normalize, in this space going into 2026. I think companies are finding their way to normalize new supply chains, which may have slowed up inventory, but they're catching up now, right? If they were over inventory, they had to suffer that, but they were moving their inventory and their supply chains as well. So I think that's all starting to shake out.
Thank you. Tariffs has certainly been a hot topic this year in a lot of our client meetings, and I'm sure across the board. Another major force that I know a lot of us have been talking about as we think about 2026 is no conversation would be complete if we didn't talk about AI. And I know Donna mentioned there's a whole session coming up next month about this, but we want to touch on it here as well. Jason, I want to ask you to help us with this. From your perspective, what are you seeing? How is AI shaping business operations, decision making, or even just growth strategies? And would love to hear your thoughts on that.
Yeah, so I see it from a couple of different ways. Obviously we run our firms and we know how it affects us as operators. Plus, I own some other companies outside of M&A, and so I see how it affects me there. And then I also see how it affects us, as it relates to us selling these companies. I would say, first of all, just as an operator, marketing has changed dramatically over the last 6 to 9 months. We see, just from a leads perspective, we see so many more people coming through, different LLMs, whether it be ChatGPT or, one of the others. That's become our focus as an operator, is focusing on GEO rather than SEO. We have completely shifted everything to making sure that we're going to show up, when people do searches or they ask questions in places like ChatGPT, And that has really, changed. I've been doing SEO for 15 years. It completely turned around, all in a couple of months. And so I think that isn't just something that we're seeing as operators. All of our companies are seeing that as well, and they're dealing with that. As an example, if somebody primarily spends a lot of money on PPC to drive their company, well, a lot of folks are stopping, they're not going to Google anymore. They're not going necessarily to Facebook anymore. They're primarily focusing on ChatGPT, and there's no ads there. So how do you manipulate, and how do you think about, getting yourself, front facing there? So that is something that all of our clients are facing as well. So the points that I made here is labor. That's one of the things that we're seeing across the board for these SMBs. Not so much in the lower middle market, but certainly our smaller companies. We're seeing a decrease in labor and an increase in margins. Things like writers and content in general, creating videos, those kinds of things. Those are all being done now a lot of people through AI, and so it's just not necessary to outsource or even have employees for those things. So again, I see that mostly on the SMB side, but it is increasing margins, and it's also impacting how founders are allowed to remove themselves from being so important to the process. So that's always something that we, when we go and talk about preparing your business for sale and those kinds of things, one of the major factors we always talk about is making sure that you're not the whole business. You need to make sure you as the founder have separated yourself as much as possible. AI is allowing them to do that through AI agents and through other processes. And so that's really helpful as well, because to the extent you can turn over a system, a platform, or a process that you've created through AI that takes you out of it, it makes it a lot easier for you to sell your company one day. Another that I want to talk a little bit about here is creating growth opportunities. So there are new growth opportunities popping up that either didn't exist before or now are becoming more apparent for these companies that through AI. So it's allowing companies to expand and expand faster again. So, again, in 2022, 2023, we started, a lot of our companies, at least in the tech space, started to come down. They all started to go into a recession, an earnings recession. That has started to come back again, and a lot of it is driven by AI. Opportunities that they're seeing, growth that they're seeing, that they're now allowed to compete against companies in more creative ways. So those that are actually bringing AI into their companies, we're seeing them expand even faster. Back to the days of 2019, 2020, when companies were expanding so quickly. And then, of course, since we do sell tech companies, AI native businesses, the multiples on these companies are through the roof right now. We've got a company we're about to put to market at 35 million with an MRR of somewhere around $200,000 right now. No EBITDA, or it's just breaking even. This company is phenomenal. It allows SEO companies to use AI to basically do all SEO and GEO work. And so agencies are now going to a company like this to do all this work for them. So it takes out all the need for, human interaction as it relates to creating SEO, creating content, making sure you create backlinks, all those things. So that's just one example of some of the things that we're seeing there and the massive multiples that are being put on companies like that. I guess finally, I did also want to talk about due diligence. If you're looking to sell a company and you are somehow involving AI into your company, you do want to make sure that you're creating an easy flow of transition to the buyer. As an example, if you're prompting in a certain way, and that prompting is helping to create platforms and systems for you, making sure that you're keeping track of all that, keeping good records of all that, making sure that all those AI agents, et cetera, are transferable. As it relates to, could be now the core of your business. You want to make sure that you can easily transition that to someone else. And then, just making sure that you're identifying how it's affecting your labor force and how it might affect your labor force in the future. Because again, for so many companies, labor is such a high, could be 30, 40, 50% of your overall OPEX. Identifying how it's already maybe reduced at 10%, but maybe reducing it another 10 to 15%. Whether you see that as good or bad in the business community, if you're selling your company, that extra margin can be pretty attractive and can be a selling point to a higher multiple.
Thanks, Jason. Michelle, Chris?
I'd love to just stay on workforce and then I'll toss it over to Chris. But in this AI space, so one thing in particular is, upskilling the existing workforce to be prepared for this. We see some opportunities and challenges embedded there. The pace of technology is just so fast that our, future workforce coming up. We talk about how do we best articulate what the future of work looks like, literally from like pre-K all the way to post-secondary now, just to ensure that the workforce is prepared. We also look at it as, how is AI supplementing and supporting the resources of the workforce? Certainly as someone who, tirelessly advocates to see jobs be created so that we can have good economic opportunity for that. We want to ensure that we're creating the opportunities for the future of workforce to land where they can be significant contributors back to society, afford to live, work, and raise a family here in New Jersey, and be, a tax contributing resident of the state of New Jersey. So there's a lot of opportunity in this space. I know companies are leaning in on training. And the due diligence, Jason's really important. The lawyer in me, everybody is just so quick to want to be, oh, I'm like, at the front end of AI and turning on their AI readers and their chatbots and everything else, and not realizing, the value and importance of their proprietary information in open systems, or even AI readers. I just finished a meeting a little bit ago where I said to the person who had a reader on, do you really need the reader on? Because I can't be as transparent in my discussion with you if you're going to have the reader on, right? These are literally like recording our meetings in real time. And I ask people to be incredibly cautious about how you're using these resources, definitely for efficiency, but make sure you got due diligence and use it as a supplement to support, where you are today.
That's a great point, Michelle. I was actually just at a conference this week. They were talking about note-taking apps and how we're regulated by the SEC and how they're coming in, and now the video and the transcripts can all be asked to be presented in litigation, and we're seeing discrepancies across the board. So yes, lots to think about there. Chris.
Yeah, so I mean, AI has obviously been the story of the markets for the past 3 years, and for good reason. I mean, there's certainly a lot of strong fundamentals that are driving this AI boom. And people are saying, okay, AI is a bubble. I mean, but when you look at the past couple weeks, I mean, the poster child of the AI trade, NVIDIA, that stock hit all-time highs at the end of October and is now down just about 10% from those levels. But over the same time frame, the S&P 500 is flat, and semiconductor stocks in general are actually up 1%. So even if a company like NVIDIA falters, the rest of the market is still supportive. So I wouldn't worry too much about is this a bubble or is it not, especially because the market is treating a lot of these companies that, a couple months ago, I mean, you just had to announce that you were working with ChatGPT or Anthropic or whoever else, and your stock would shoot up 15, 20, 30%. Now you see a lot of those companies, not participating in the market rally over the past couple of weeks. And so that's a lot more healthy market activity. Especially when you consider the fact that, in the S&P 500, I mean, over a third of the market cap is now in tech stocks. And the top 10 stocks by market cap are about 40 to almost 50% of the index. That is not a diversified portfolio. You are taking a lot of concentration risk, even with these indexes like the S&P 500 and the NASDAQ. So, we're kind of focusing and kind of echoing what Jason and Michelle have talked about is, what does this next phase of the AI boom look like? And you're going to start to see use cases pop up that aren't just building data centers. You're going to see industries like industrials and healthcare that finally have, applications and use cases for this technology. And, as we've seen throughout history, whether it's the railroads of the 1800s or the internet, sure, those companies that built that infrastructure benefited in the short term. But when you look at kind of the longer term impacts of that technology, they spread across the entire economy. And so we're focusing on a lot of those sectors and industries that should benefit from all of this revolutionary technology.
So I guess we could agree AI is not going anywhere, nor is it slowing down anytime soon. And I never thought I'd say this. My kids will probably be teaching me some of this at some point, and haven't we all seen that? So we've talked about a lot. I want to just shift gears a little bit to New Jersey and what all this means to our New Jersey businesses, our New Jersey employees. Michelle, new administration stepping in, ongoing discussions. I know you touched on energy a little bit, housing affordability, broader economic trends. What are the things we business owners should be thinking about, and what does this mean from your perspective?
So let me start with Governor Cheryl-elect ran on, I'll call it her three-legged stool, was, addressing the energy crisis, on day one, freezing, and then a policy coming behind that. Number two was affordable housing, and number three was government efficiency. Those were the top three things that she pounded away during her campaign, and she won, handsomely. So some would see that as a mandate to address those things, right out of the box. So, we keep an eye on that. Look, we talked about energy already. There's got to be a comprehensive, holistic plan for energy. We have to have an all of the above approach to energy, and we need to start creating more generation within our state and not relying just upon imports, as I talked about before, because of the cost of that. So, we'll be mining those issues for sure. Affordable housing. Here's the issue with affordable housing. There is this legal definition of affordable housing of who is eligible, and eligibility is a very low wage and entry point, and then it freezes. And then there's market rate housing that, frankly, is all the way over here. There's this whole piece in the middle called workforce housing. That those who are not eligible for workforce housing nor can afford in New Jersey true market rate housing need attention to. And so as part of the discussion, we want to ensure that we're looking at the needs of the workforce here in the state of New Jersey, and making sure we're not just stuck on that traditional discussion of what a definition of affordable housing is, where we place it, what the rules are, et cetera. Remember, we're a very dense state with the exception of South Jersey, right? We've got a lot of room for growth down in South Jersey, but we want to be careful about, where and how we mine that growth relative to where the jobs are and how people get to the jobs. That third piece of government efficiency, again, we hear every single day from our businesses that they are bogged down in mandates, their inability to get permits and licenses to even start a business or to build a facility. So, the governor ran on a platform of Get to Yes on responsible projects, and to get people with transparency of understanding whether it's a building permit or a license for your vocation, to get you through quicker. So NJBIA, we're really thrilled that we have 3 people working on transition teams, which is fabulous. We have a seat at the table. Our big mantra has been business needs to be back at the center of the table because we drive economy. And she has committed to having business at her table, and that is being represented by our role in transition. So we are cautiously optimistic that, as opposed to the last 8 years when the voice of business didn't matter, it was a very anti-business administration under Governor Murphy. We're very, very cautiously optimistic of our opportunity to inform good policy on behalf of business going forward.
Thanks, Michelle. Jason, I know you said you have clients across the nation, but anything specific you wanted to chime in here as well?
Yeah, I think I would just focus on the M&A side, since that's where I focus, and things to be thinking about. And we were talking about AI, and some of the companies that we're seeing winning the most are those that are integrating AI with strategic employees, and making sure that you continue to have that foundation of employees with your company. So many private equity groups and family offices, they're not so interested in coming in and buying a company that lacks that foundation, that infrastructure that you have with people. And so those that are mixing those two things together really well are, in our opinion, doing the best at market. And of course, the most important thing when you're looking to say our company is it fundable? Is it a company that they can go out and get a loan for this business? And so if you have that infrastructure, it really helps. I would say another thing to focus on is making sure that your fundamentals are there, right? Your financials, making sure that you're starting from the very beginning, and looking at your financials. So many companies, just don't focus on their financial statements, and they don't think about whether or not they should be cash or they should be accrual, and how that affects their tax returns, and how that's going to impact them when they sell their business one day. And that really does matter as it relates to, especially if you're a small business and you're going to be selling for under $6 or $7 million. That's going to matter to you because you're probably going to be in the SBA world. There's probably going to be an SBA buyer, and they're going to primarily focus on tax returns. So, those are usually cash based for small businesses. Yet a lot of small businesses want to run on accrual because if they're growing, that makes them more profitable. And so thinking about talking to a broker or a consultant or somebody to help you, think about your financials early on is really smart. Because we do believe a lot of people are going to be looking to go to market in 2026, and it's never too late to be thinking about, who you should be talking to, putting your deal team together. As an example, most business brokerages, they don't charge any fees. And so you can start talking to them early on. They make all of their fees, once they actually close. So there's no fees, no retainers, nothing like that while they're helping you. And that can be for months or even years before you go down that road. And so, putting that deal team together and starting to think about that is important because we do think a lot of people will be interested in selling in 2026. I think that's all I have on my side.
Chris?
Yeah, I mean, kind of the story of a lot of our national elections, at least, certainly in 2024 and also the elections that we just had recently, the story's been affordability. And I think, New Jersey, we're kind of in a perpetual state of unaffordability. So welcome to our world, rest of the United States. Um, but clearly that's going to be a major focus as we head into the midterms in 2026. And while left and right both have different ways of approaching affordability, we're certainly going to see a lot of noise from the political atmosphere as we go into next year. And all I would focus on is that it mostly is just noise. I mean, we're going to be headed to probably a divided government where policy impact won't really take hold. So I would choose more to focus on a lot of the stuff that's come out of like the OBBBA, which will take effect next year, as well as the tariff environment. I mean, we should get a decision from the Supreme Court over the next couple of weeks as to the legality of the tariffs imposed. And it seems, at least, if you're looking at the betting markets, it seems like there is a increasingly likely chance that the Supreme Court strikes these down. And that could kind of go either way. But that should be a positive for equities if they are struck down. But that's probably a negative for long-term bond yields. We're running $2 trillion federal deficits, and tariffs are currently bringing in at if you annualize the monthly revenue, it's about $300 billion a year. So $300 billion is a pretty substantial impact on our bond market, which if that goes away, you should see long-term yields spike, and I'm not sure what equities are how they're gonna react to that. But yeah, from an NJ environment, I mean that's at least from a national perspective, that's kind of what I'm looking at.
This has been incredible. A lot of information. I want to wrap up with one last question, but I wanted to see if either any one of you had anything else you wanted to share before we then turn it to Donna for Q&A. Any final thoughts? And then I have one final question I'll ask each of you. Okay. So I'd love to end on if there was one concrete takeaway or, piece of advice you want to leave for the audience today as they plan for the year ahead, what would that be? You covered a lot of information. What's one thing you'd really love for them to walk away with? Whoever wants to kick it off.
I'll jump in. Look, I would say, in a dynamic world where we feel like there can be a lot of headwinds and challenges, turn them into opportunities. At every turn, every time there is something that's steering you in one direction, think about how do you turn the sail to float you in the next, and what do you need? What are the resources to do that? There are so many incredible opportunities out there yet to be seized. We need a good runway and a pathway to get there. Again, at BIA, where we're trying to clear the runway for many of you, getting some of this, regulation and demands on your business out of the way, and some of the tax and regulatory relief. I'm going to remain cautiously optimistic we can do that. But, in dynamic times, look for opportunity and seize that opportunity where it makes sense.
Love that. Jason?
Yeah, couldn't agree more, Michelle. All important things. I would say thinking about 2026 and where you're going to go, like I mentioned before, you want to make sure that you're being strategic about M&A, if that's something that is interesting to you. If it's not something that's interesting to you at the moment, make sure that you're putting your business in a position to be successful in the future when you're doing that. That's something that not a lot of companies are doing. And I think another point that I'm seeing a lot with a lot of our new clients come on is that they're getting a lot of information out there, whether it's through the LLMs or through some other source that's just not accurate. And some of that's because of the dynamism that's out there. Everything is just changing constantly. So that's not necessarily their fault. It's just maybe the information's delayed. But don't just assume what you're seeing out there is correct. Make sure you're talking to an expert that's dealing with it every day, because you might think one way, especially with respect to M&A, you might think one way, but it could be something completely different. So get a good understanding from someone who's actually working in that industry. A lot of bad information out there right now.
Thanks, Jason. And Chris?
Yeah, from a portfolio perspective, I mean, I would suggest know what you own. Even if you're invested in index funds, I mean, because of this level of concentration in the Magnificent Seven tech stocks and just tech and more broadly, if you want to be diversified, I would encourage you to look at other opportunities both in the U.S. market and abroad. If you manage this yourself, if you have an advisor, I mean, talk to them. They'll walk you through this and walk you through how to diversify and really reduce the concentration risk that people have in their portfolios just after these last couple of years of performance.
Thank you all so much. Thank you, Michelle, Jason, and Chris. I want to bring Donna back on. And Donna, I know we left some room, some time here. So any questions, throw them our way.
Okay, before I get into questions, Susie, I want to pose your last question to you as well. What is the action step that you feel our audience should take from where you sit?
Yeah, great question. Really working closely with your advisors, whether it's your accountant, your attorneys, your financial advisor, making sure that your affairs are in good order. Michelle and Chris, I think, alluded to the one big beautiful bill. Lots of changes. What does that mean to you from a business perspective and personally? Start taking those strategies today, start implementing them next year. Planning takes focus, and I think now's the time to make the time for that.
Excellent. Jason, you talked about having some basic foundations in place, and I was listening to all of you talk. There's so much information here, and I was thinking that, I think smart companies are using kind of AI-infused strategic people to up-level what they're doing. So I don't really think that AI is going to replace that, but I think it's a tool that we can all use. To that end, Michelle, you said when we have headwinds, there are always opportunities. I happen to have a business where I can capture business from growing businesses or downsizing businesses. So we reposition. And also, similarly, I think, Jason, you talked about it as well, but are there, and this is for all of you, are there particular sectors or industries that you think are going to fare well in the next 12 months that we should be marketing to, emulating? So what are some of those industries that we should be looking at for ideas?
Yeah, I'm happy to jump in real quick. I mean, first of all, manufacturing and business services are our two biggest opportunities right now. These are the ones that we're getting mandate requests constantly from equity groups and so forth. If you're running a manufacturing company or thinking about running one, that is a very big opportunity for obvious reasons, because we are changing the landscape in America
Right.
for manufacturing. So that's big. But business services, over the last year, the multiples on those companies are very, very high. Lots of demand. They tend to have higher margins and recurring revenue. And so that's something that's very big. So just from my perspective, again, I think those two companies are big. And of course, I mentioned AI companies. That goes without saying, right? I mean, if it's an AI native company, it's going to be interesting. There's a lot of companies looking to bolt those on and finding ways that they can bring the brain power in that's creating those things to help them expand their own business.
Excellent. Michelle, any thoughts on that?
I mean, I'm going to echo, particularly on the manufacturing. Again, I'll just, state what those challenges will be on expansion and creating a new here in New Jersey. So if we can get out of our own way there, that'll be a good thing. On the AI front, we have these AI strategic hubs coming up in New Jersey. At NJBIA, our vision, and vision's bigger than just you as an organization, but our vision's to see New Jersey reclaim its stature as the innovation state. These AI hubs are an opportunity for us to continue to leverage through incubator and accelerator these smaller entrepreneurial spirits. We're seeing it, through our institutions of higher education. The whole idea of going to market with ideas that are coming out of our next generation workforce early on, and then how do we take those to market and commercialize. So there's a lot of opportunity in that space.
Excellent. Chris, Susie, anything to add?
Yeah, if we expect kind of a stronger economic environment, yeah, that should be better for a lot of these kind of non-tech sectors. So whether that's industrials, whether that's materials, a lot more kind of domestic focused companies, and that includes like smaller cap stocks, which again have not participated as much as these large cap tech stocks. So that's kind of where our focus is as we head into next year.
Mm-hmm. So we have a question in the chat here to Michelle. If the next administration is business as usual, I haven't pre-read this, so I'm going to apologize in advance if I need to. I was worried a little bit about the politics. If the next administration is business as usual, New Jersey will remain as uncompetitive to attract new businesses compared to locations in the Southeast, Southwest, other parts of the country. And it is a good question. Do you feel there will be a significant change in the business as usual in the next 4 years? Because I also have heard this for years and years, and I've been on the board of the Morris County Chamber for about a decade now. And New Jersey is a tough state to do business in. Do we think this new administration might be able to move the needle on that?
Yeah. So first of all, let me just say, yes, we compete with the South. Okay. We compete with our neighbor right next door in Pennsylvania, our number one competition, who eats our lunch each and every day when it comes to corporate business taxes, attracting the next data center, the new project. Okay. So we got to compete regionally, because the whole Northeast is expensive. And so if states like Connecticut can get it and Pennsylvania can get it, like we need to be getting it too, right? So, but in terms of next administration, as I said, I am cautiously optimistic. We were committed a seat at the table, and that is a move in the right direction. I will tell you that, throughout the campaign, we were feeding both candidates policy positions on how to better address the needs of business community. And both of the candidates were taking our information. We had a blueprint for competitive New Jersey, 66 policy recommendations. And in fact, when I talked about Governor-elect Mikey Sherrill and her government efficiency, her Get TS, that comes out of the BIA playbook, right? So we're going to have a seat at the table. We're going to be able to engage at the end of the day. We're not going to flip a switch overnight. Can we get some slow and steady, long-term, iterative improvement going here? That's certainly my marching orders. That's what I'm after, and I think we'll know in the next year to 18 months what the next 4 years are going to look like in New Jersey.
Excellent. Okay. And also from our audience, as a business, what strategies would you recommend? And this can be for anyone. What strategies would you recommend to best support the health and well-being of our local communities? And how can these efforts contribute to strengthening that local economy? I agree. I think it's a groundswell situation. So how would any of you comment on that?
Hey, I don't want to dominate, but I have to make one statement and I'll turn it over to my colleagues. I say each and every day when I'm out speaking, great businesses make great communities.
Yeah.
Great businesses make great communities. The businesses are the fabric of every community. Who is it at the end of the day, that comes home from their remote or their office that they commuted to and from, and comes back and supports the Little League, the church, the synagogue, all the things that are going on, the downtown parades, right? The nonprofits, the connection between our service providers in our communities and the companies that live in those communities is very strong. You mentioned the Morris Chamber. Your regional chambers of commerce are there to be that B2B, right? To make those connections on how you as business owners support your local community. And you do it each and every day. I am very proud to talk about that when I'm out speaking all the time.
Excellent. Jason, Chris, Susie, any thoughts?
Yeah, I would echo that. To the extent that you can support small businesses, do so. I grew up in a family business. They owned restaurants, and it was the local community that allowed my parents to succeed. And I think paying it back, and when the community reaches out, support them. They're supporting you. So to the extent it's everyone does it, it's easy to place an order on on our phones, and it shows up at our front door. Not mentioning any specific companies. But if you can support a local business, I think that's what helps us all thrive.
I agree. I think it also goes to having a great workforce. If you're helping people to create great lives, you've got happy people coming to work. And it sounds so simple, but I think sometimes it is actually that simple. Um, okay, so looking ahead, um, as we look at the first half of 2026, what are some of the economic indicators? So this is going to be a two-part question, and they're related but not the same. What are some of the economic indicators that we should be looking at to understand the rest of the year and even further? That's the first part of the question. The second part of the question is for someone who, like me, is not in your field. Economics is really not part of my world, but I'm a business owner, so I have to pay attention. Is there a particular blog, author, whatever that you recommend our audience reads to be able to stay on top of this? So, what are the indicators and what do you think we should be reading?
Yeah,
Go.
I'll take a stab at this one first.
Okay.
Certainly looking, and now that we're getting all of this government data that we missed during the shutdown, I mean, it's going to be deluged over the next couple of weeks, and a lot of it is going to be noise. But certainly looking at inflation data, how much of these tariffs are coming into the inflation data, and especially like looking at the services data, which isn't as impacted by tariffs as maybe goods inflation. So that should kind of tell us a little bit more about the trajectory of inflation and what the Fed might do with rates. Um, Certainly payrolls data. I mean, we're not expecting, 100,000 jobs added a month. I mean, it's just not possible with how tight our labor supply is, at least on a sustained basis. Maybe we get a couple months here and there, but certainly watching to see if payroll growth starts to accelerate. And then for the second part of the question, I mean, I would just say get a diversity of thought. Certainly,
Yeah.
we're all inclined to like go to our echo chambers and get the news and data that we want to see and read. But I would just encourage people to go across the spectrum and get a variety of opinions and form your thoughts from there because that's truly what'll help you kind of navigate this environment.
Great answer. Anyone else?
Yeah, I would just say I'm probably a little bit more in the echo chamber, Chris. For me, I get most of my information daily from the Wall Street Journal and watching Squawk Box. These things help me, every single day, talking to clients, talking about where we are in the economy, talking about how things are changing. And yes, I understand it's probably a little bit more right leaning, and I'll throw the New York Times in every now and then just to make sure I'm getting both sides. But I really, cover to cover Wall Street Journal every day. I really think it's super important, and you will stay up on top of all economic data if you just read that.
Okay.
So for those of us who are stuck in a car driving all across the state of New Jersey each and every day to be boots on the ground with our members, right? Similar to you, Jason, right? I'm a toggler between the news stations. So I'm always starting my day off, with Squawk Box to see where the market's sitting, right? And then I'm toggling between Fox Business, CNN, and MSNBC, because I'm going to hear the same story 4 different ways. And I know that the truth is going to lie somewhere in the middle of all of it. But most important, Donna, each and every day, you all should be reading your New Jersey Business Today, the award-winning daily from New Jersey BIA, where we give you the news of the day.
That was a tee up, Michelle.
It sure was.
And Susie, why don't you round us out?
Yeah, I was gonna say Bloomberg tends to be pretty well-rounded, and also really informative with a lot of really good information. And so is wealthmanagement.com from a financial perspective and just the array of topics.
Awesome. Well, I want to thank you all for giving us such an incredible hour of relevant information. I took copious notes and I will be watching the recording. So I thank each of you for joining us. And if we missed any of your questions, feel free to email donna@c3works.com. I'll make sure they get answered. And I wish all of you a great holiday season. Thank you, everyone.
Thank you.